Hello friends, welcome to my channel and thanks for watching this video, and welcome to the another weekly session of USA weekly market report. And now the past week or the recent week that has gone by has been a very volatile one, and who's the winner here? Obviously the central bank. Okay, because this week is dedicated to the central bank of United States of America, and this is the last Friday closing where the Dow Jones moved 530 point on the downside, Nasdaq 130 point, and S&P obviously the average of everything. And you have VIX that has gone up from 16 to 20. You have oil that has been pretty much steady at 71.5. Commodity is fine. I think it's fine, and it will bounce back with the next upcoming things going forward, whatever the announcement may be. And what's more important is this one, the US dollar index, which has been jumped from 90 to 92.32. Now, what's actually happened is this headline, right? Let's open this. And the Federal Reserve on Wednesday raised its expectation for the inflation and moved forward the timing of its interest rate to hike to 2023. This move of a huge amount of repositioning in the global financial market that sent the dollar higher, and one of the strategists said that it's the end of peak dovishness. Now there are lots of things which are there in the press release, so we are going to discuss some of the things as or in a straight line manner rather than talking all things about the press release. Now understand this before we go to the charts and all those things, that I'm not saying that they are not going to move the needle, but this is very much visible in the past what has actually happened when they started moving the needle. So they have started saying something about the end of dovishness, and they are talking about the inflation, and it's because the inflation was higher than expected. Now there are certain reasons behind that, and if growth takes over, do market actually cares about the inflation at that time? Okay, I've been very much vocal about the fact that when you are in a bull market and you have inflation, market tend to ignore that if you have enough amount of growth. Okay, that's the key factor. Second, if you remember 2003 to 2008 period, there has been a subsequent amount of interest rate rise over a period of time, and the stock market ignores it before it actually gets heavy and started falling bigger and biggest. Also, the time is different. There was, I would say, a big experiment that has happened at the end of 2008-9 in the form of big bailout, and the bailout gets big and bigger and much more bigger with lots of printing. Now, if US Federal Reserve continues to be a hawkish team, obviously it will have repercussions on the US market as well, because US market is one of the unique market in the world that actually means business, and that actually means that the stock market will go higher and higher. And we have seen that this 60% or 70% kind of fall in the index is very much not possible in a scenario even when you are in a recession. A recession does not mean that the stock market need to fall or the mainline index need to fall 60 or 70% until and unless there is no buyer and you have extreme amount of panic. And we have seen that since 2008 the central bank jumped in and jumped with all guns. And whenever there is something fishy in the market and the rumors are going on that because of XYZ news the market is about to go down, central bank immediately jumps in to support the market. Okay, so it's not possible that they are trying to manage the market from both the ways. Now, having said that, I think that there is enough talk before we can actually go to the charts, and let's talk about some number crunching that will help you. Now, this is the US 10-year yield. As I've been saying, or rather, I will show you the short-term yield because they are the one which moves very significantly. Now you can see here, let me go to the line chart. You can see here that from the lows of, so this is your US 2-year bond yield. Okay, so from the lows of 1.33 in 2003, it went up to 5.25 in 2006. Although we cannot calculate the percentage of percentage, but just to measure the length, that the interest rate, it went up by 280% in terms of point, and if you consider 1.33 as an absolute number, so there is a significant amount of jump that the interest rate, US 2 years interest rate, has shown from the lows of 2003 till the highs of 2006 or 7. So you need to understand that it's not only the interest rate, it's also the growth. And once the growth slows down, they are bound to make such statements if they want the equity market to stay where it is right now. And if they want it to fall, obviously they will say something, and every time they will say something hawkish, which will keep the market, not only the US market but the entire global market, in a doldrum. Right now everything looks shaky right now, and the biggest culprit here is obviously the dollar, and the dollar index went up very sharply. Okay, because a 2-point move in a dollar index is not a joke. So till last week I've been talking about, even I am talking about the weakness of the dollar and how it is hanging by its teeth. But with the single statement, you can see how the dollar has moved. But still I am not very much happy or not very much bullish on the dollar. The reason being, the situation or the fundamentals of the market are completely different from where it was 10 years back. And if they try to think that the market is same as it was a decade earlier, then it is completely wrong to think like that. Okay, that's very much clear. There's no denial in the fact. Now, as far as the trend is concerned, obviously you have two support level on the downside, 89.79 and 88.56, and on the upside you will have your resistance at 93.59, right? So this is what we are looking at, and on the upside the big range or the higher end of the range will be in between 100 and 100.2. Now we'll specifically looking at 93.59 and whether it is able to sustain above that and how much steam is left, because understand that this is not only about the dollar index but also the fundamental behind that. Now if you are looking at this chart, so this is the chart of Dow Jones, and with the single move, this is the daily chart. It is actually very near to the 20-day moving average, which is this green line. Now let's go to the hourly chart and let's see how the price trend has been, because we are not expecting some sort of mini correction, mini recession or something. We will just look at correction, and because there is a downfall, and we will see how the stock market reacts to it. Obviously interest rate sensitives moved very sharply, and you can see how the Dow Jones has moved, in a very negative manner. So what we have in terms of support is something like this. So as you can see here, it has moved below all the moving averages, important moving averages, and probably uh, the range which we are looking at here is something like this. So what we have here in terms of range will be, so here we are, what we have in terms of range is here we are 31,335 as your lower support, and on the upside you have a range at 35,838. Now it's been moving and it's unable to, the price has been it's been squeezed like hell in the past couple of months, and I have talked in my previous videos. So whenever price squeezed, you will see some very big move on either of the side. So here we are looking for a support of 31,335, which means there is a downfall, probable downfall of 2.5 or 3,000 points, right? Looking at the Nasdaq is very much skeptical to go beyond 14,200, which I've been talking quite some time, and this is the third attempt. But we have to see very much closely, because this is not good. Okay, if multiple times, if let's see, if the stock, if this index unable to move beyond a certain point and hits the multiple resistance at a single point, faces multiple resistance at multiple times, now this is not going to be a good indication. So things are changing, and that's why you will see people change their views. But this is not the end of the road that you need to understand here. Now as far as the levels are concerned, we have two specific levels on the downside: 13,592 and 13,380 as far as the Nasdaq is concerned. And as usual, we are looking at a resistance of 14,200, and once it sustains above that after the breakout, once it makes a breakout, then only we can call it as a breakout and a start of a new trend. But understand this thing, this is the third time the stock hits the same range, okay, and at the same point. So this is like a triple top, and I'm talking about I think the daily chart. You can consider this as a daily chart. So if this is a triple top, and if this time market unable to sustain at the point where it is actually holding right now, then there will be a problem. Okay, there will be a problem, and we will again look for a support in between 13,380 and 13,592. So you need to keep these things very much clear, that the market turns volatile. Okay, I'm not saying, see, the correction is there, but I cannot call it as a start of a recession or something like this, the end of the dovishness and the start of the hawkishness. I don't want to use this kind of term. Frankly speaking, I don't understand these terms, right? Obviously, I'm not talking about the theoretical meaning of bookish meaning, but market turns bearish, market turns bullish, market turns, in a rabbit-like manner where it has been consolidating and hopping in between a range. So there are lots of things that are going on. So market turns volatile. You need to at least save some of your profit and wait for the support level to actually comes, right? So what else? Some more here is to look at something called Brent, or the commodity, because it has definitely have an impact, right? So the commodity is not going down, and if you're talking about the oil, because oil has lots of technical and fundamental dynamics, and if it continues to move higher, so these things will definitely have an impact. But because the swings are volatile and very much big. So for the time being, this is the Brent oil futures. We will see, or we will actually waiting for Brent future to hit, because it's a very much certainty that it could probably hit 87.36. Okay, because this is a big resistance that it has faced in the past 6 or 7 years. So this will definitely work as a uh, resistance, but once it gets through, if it moves beyond 87, 88, 89, then there will be a problem, because the last time it hit the spike was in the year 2009, and it was 149. Now we are not expecting this to happen for the simple reason because we have alternative source of energy, but in the market everything is possible. Because understand this thing, if the price has been in a consolidation for 10 or 15 or 20 years, and if it is not inflation adjusted, then it is a lower price which you can see. This has consolidated, and when you adjust the price with inflation, you will see the actual number is much lower than what it represents. So understand these things, and let's see how the market will settle and what will happen, or if there is anything, you know if the, let's say, we have seen this thing happening many times. When the stock market goes down and goes down big, central bank simply jumps in. So we need to see whether these kind of things happen or not after a downfall of 2000 or 3000%, but at least it is very much visible in the chart of Dow Jones, and Nasdaq is not yet started, if there is a short term correction. So this is the end of the video. If you like this content, do share your thoughts in the comment section and subscribe my channel. Lastly, take care of your family and friends.